Good afternoon, everybody. Let's do it. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. All right. Another down day on Wall Street. SPYs here closed down 0.85%. The S&P, the Nasdaq closed down 1.5%. The IWM, the Russell here closed down 1.3%. You know, let's see. Take a look at the Dow. Dow's down 0.5%. A little bit of strength there, I guess. Yeah, I mean, look, today was brutal. We have basically had 5 days of selling here in a row with barely even an intraday bounce to even talk about since the Fed day. It's just been continuous selling, continuous grinding down. You know, without a doubt, it's very obvious here since we broke down, I think, 3 trading sessions ago, the day after the Fed day, we really broke down on the daily chart. There's nothing bullish that you can point to on either the technicals or the fundamentals really right now. Though we'll see what the housing data looks like when it comes out later this week. But that Fed meeting was, you know, really bearish. Everything that was said there. I still do think, and maybe it's the optimistic part of me, that the Fed is once again using their language, which they know is a very powerful tool, with some of the stuff that they said at that last Fed meeting. And, you know, the more important thing is really going to be the economy right now. But again, everything that the Fed said at that last meeting was negative towards the economy, and that's the most important thing. So you've just got fear of stagflation, fear of further economic deterioration hitting this marketplace, breaking any semblance of a short time frame uptrend that we had, and just totally breaking the market down. So all things held equal, you're better off being short than long, but not all things are held equal. In these environments, when we're breaking down really hard, it has paid us very consistently this calendar year, which has been a difficult calendar year. It's been, you know, I don't even want to say it's been a difficult calendar year, because it hasn't. It's just been tricky and violent and risky and volatile. More so than difficult. I actually think all the volatility and the big movements that we have had has not made this the worst year in the world from a trading perspective. You've just really had to be like a surgeon with your risk management, because the movements have been so big that it has led to some tremendous opportunities throughout the calendar year. But like I'm saying, if you're holding everything else held equal, then you're better off being short than long right now. But we always need to be paying attention to our other factors, our extension factors. And there are just a few things coming into today's trading session, and they'll also be in effect coming into tomorrow's trading session, that have just been stuff that we've consistently looked at, that have consistently paid us on counter trend trades to the other side of the market, where we're coming in. I mean, we have basically nailed every major market low as a team here of the entire calendar year. And honestly, not every, but most of the major market highs also. And the way that we've done that is by looking at sentiment, positioning, and other things like extension. Extension being a really big one. And pretty consistently this year, whenever we've hit that $10 plus extended from the ADMA on the daily chart for SPYs and Qs, that's usually when you get some sort of corrective price action where you can begin to look at the other side of the market. So while I do think that it makes sense to be looking for shorts, you got to recognize, and I know that the SPYs went ex-dividend on Friday, so maybe they're not the best thing to look at. We can look at the Qs also. But when these SPYs, like they are right now, are trading $10 away from the ADMA, pretty consistently this entire calendar year, it has paid to look for the other side of the move. It's paid to come in and to look for the long side of the market for a bounce. Now, we don't want to catch a falling knife. We want to do this strategically. And while today ended up being a really brutal day, I still stand by my thought process and my rationale from the morning meeting today that it made sense to be looking for long trades to come in, especially, I know we had like a flat to up open. What we said in the morning meeting was like, especially if we are getting down to yesterday's low or breaking yesterday's low, that hits that point where you're extended enough where it makes a lot more sense to be looking for those kind of counter trend opportunities. There's just the buyers have just been completely on strike though. There's been no follow through to the long side from buyers at all whatsoever in this market, and it's been frustrating and disappointing, especially when you look at a lot of those factors, those layers of probability that we want to pay attention to, that are also signaling to us that we can get that bounce. A lot of them are there, and the market's just not participating. Did the VIX close red today? I know you VIXy certainly closed red, but for a good portion here in the afternoon, I'm not sure if it closed that way or not. It probably did. The VIX was negative. The VVIX was negative. The dollar was like flat-ish today. I don't know why this is flat with a gap down this morning. Is there an ex-dividend or something like that in the UUP ETF, which is what I'm usually looking at? But the UUP ETF actually closed up 1 cent on the day, pretty much flat. But you can see a gap down in price. Usually that indicates some sort of ex-dividend that kind of came in. It was a dividend. Thanks, Rock. So that makes sense. So again, VIX red, VVIX red, dollar is flat. Market's extended by $10 today. The short-term tactical sentiment from Pat's note is deep in the green here, which also has been a consistent indicator for us to not necessarily come in and just blindly go to the long side of the market, but certainly that it's been a signal to not put on any shorts. So you got all those things kind of coming into today's trading session that, again, even though we ended up having a pretty garbage day where we grinded down all day, I really think that on this type of day when we've got all these layers of probability there, that your better, higher probable situation or even better risk reward at this point really is looking for longs for a snapback trade than it is looking to press shorts on a trading session like today. And it'll be totally different if we are snapping back to the upper 380s in the SPYs and we're no longer extended at all, and we can have a conversation about if that important 390 that we broke down from then holds as resistance and if we should be shorting there. That's not the situation. The situation is a day 5 of selling. Again, you could argue that maybe the CPI day is a green day and it's just day 4 of selling. I would argue that even though we closed positive on the CPI day, we literally sold off intraday 10 points and sold all day. That this is the 5th down day here in a row. Regardless, 4 or 5 down days in a row, heavy extension, VIX that is, I mean, everything is just there that's saying look for the bounce back trade to come in today. The only thing I was a little bit nervous about, honestly, was that it was a Monday. I try not to think too much about days of the week. I mean, even when you talk about, calendar effects and seasonality, we've got the Santa Claus rally. The Santa Claus rally, by the way, for people who don't know, it's not all of December. It's not a market bounce into Christmas. Technically, what the calendar effect is that we call the Santa Claus rally is the 7-day period of time. I think this year it might only be 5. That is the last 5 days of December and the first 2 days of January, where the historical average of the market is positive 1.25%, as opposed to in a normal 7-day period at any other time it's 0.2%. I always really take seasonality and days of the week and stuff like that with a big grain of salt, because just because something happens on an average year, well, as we all know, this has not been an average year. So I always get a little bit nervous on a reversal Monday, or turnaround Monday. Turnaround Monday is not an expression, right? Turnaround Tuesday is an expression, which, by the way, is for tomorrow, and a lot of the same factors that had me wanting to look for the long side of the market today will also be in play tomorrow. But don't get discouraged, guys. These last 5 trading sessions have been really difficult. I think that we've actually navigated it really well. I know that I, as is kind of typical for me, have done a pretty good job on calling some longs at like almost perfect pivot lows. If I can give myself a pat on the back, at the same time I'll insult myself to even it out. Have not done as good of a job as I should have on the shorts off of pivot highs and off of retracements. But I mean, even on today's trading session, I pretty much called out 3 longs today, and they're like the 3 kind of, you know, more major little lows that we had on the market, right? This was my favorite one actually at 11:40, even though I usually don't like that midday trading, and for the rally into the close. So, you know, pretty much was able to still kind of be 3 for 3 on calling for longs on bounces in what has just been an excruciatingly bad market. So I will give myself a pat on the back for that. But we got to remember when we're taking those trades that they are counter trend trades, and really what you're looking for is that downside extension to come in, those hammers to kind of be able to be there a little bit, and then you're looking for the retracement trades to come in, and on those retracement trades, you really can't be greedy. It's really about looking for a bounce back to that equilibrium area, and then just remember though, when you take those trades, that we are this extended, or the move to the downside's been this big. So like I'm saying, you could get a snapback to 380, 750 in the SPYs, which is you know, $8 bounce from where we are, an even bigger bounce off of lows from today. That's a fantastic market bounce, and still be bearish. So, you know, just remember when you are taking those counter trend trades, if you took any of those setups that kind of got called out today, book your profit quickly to make sure that you're not going to lose any money, or ideally that you're going to make a little bit of money if the trade fails. If the trade fails, it's not going to be the trade that makes your week or makes your month or makes your year. I think that's very obvious. But if you're able to do that consistently, and we have, again, been very consistent on where the long call outs are kind of day in, day out for at least those little bounces. And eventually, if one of those little bounces turns into something more, and you're able to hold on to 25%, 15% of your initial position, that initial position could really pay you. I remember, you know, when we got that bigger bounce here today, you know, we were looking at, was it Microsoft, right? Yeah, Microsoft was one of the ones we were really looking at for that bigger bounce. We were looking at this Netflix here post 10 a.m., you know, for this bounce through 390 where it was showing some relative strength. I remember the tougher one was like Nvidia long off these lows, but even that one eventually gave a little bit of a bounce that kind of let traders be able to get their risk covered. I mean, it's just a brutal market. None of those trades are really given follow through. Financials off the open, we very quickly recognized the relative strength in the XLF. Bank of America traded, actually this Bank of America was probably the only thing that held up really well. And we're calling out longs in this thing by, you know, 9:33 in the morning. Like, you couldn't be more accurate with the long call-outs that we're having. It's just a brutally bearish market where the majority of those are giving the bounce that we're looking for and then failing. But I would say don't get discouraged. If you've been participating in some of those longs, some of those bounces today or Friday of last week, I would not come in all of a sudden tomorrow and be inconsistent. You know, if we gap down tomorrow, which I know Pat was talking about, like, you know, the market doesn't always like to make it easy. Sometimes it does. Most of the time it doesn't. So if we could get a gap down tomorrow, that would once again be fantastic. It'll have us being super extended with a gap down on a day 6 that we can come in and take advantage of. A gap up is going to be a little bit more tricky because it's going to, you know, satisfy some of that extension and some of that short time frame sentiment. But I would say at this point, be consistent. I don't think, you know, if you've been looking for bounces and trying to buy those little pivot lows that we've been kind of calling out for the last 2 trading sessions and not getting follow through, don't all of a sudden change your plan at SPY 376 tomorrow. Be consistent with that process, and then eventually this market will give a time of price correction. Hopefully it's not through time. That would be about as bearish as I could possibly think of. But you know, I've said it kind of joking around, but not fully joking around. This SPY sell-off from 410 to, you know, 378, and again, I know $1.70 of it is an ex-dividend, but if the market were able to continue to sell this way, All the biggest bears that are sell-side analysts are calling for what? SPY 300 to SPY 320? We will literally be at SPY 320 if we continue to sell the way that we've been selling by New Year's. And I just don't think, unless a real event occurs, which can always happen, like an actual black swan event occurs, I just almost don't think it's physically possible for the market to do that. I should be very cautious with my words, because we know in the marketplace anything that can happen will happen over a big enough data set and big enough of a period of time. But it would be an absolute and utter statistical anomaly for this market to not give some sort of, again, worst case scenario, sideways price action at some point beginning in the next day or two, let alone a bounce. I do not think that we can continue to sell. Yeah, seriously, I do not think that we can continue to sell the way that we've been selling. Yeah, I mean that's pretty much it. That's pretty much all I got. I do think that despite the bearishness of these last few days, that we couldn't have navigated this market better. The communication, figuring out where the relative strength is, knowing when to take your foot off the gas pedal, and finding those little pivot longs for kind of some short time frame buy setups that have not given any follow through. I really don't think you could do a better job than what we've been doing on those, and we've been doing them in real time, which is fantastic. But I don't know. I guess I'm feeling a little bit discouraged. So if I'm feeling a little bit discouraged, and I generally am, pretty good at sticking with things, I would assume that some of you are feeling a little bit discouraged as well on the state of the market here the last handful of days. And I don't want anybody to be discouraged. We've done a great job communicating some of those pivots, and we will get a little bit of follow through eventually on some of those trades. And you got to stick with the game plan, stick with an understanding of how statistics work, how extension works, how positioning sentiment works. The same playbook that has treated us so well all year long is based on an understanding of market dynamics. It's not just gonna evaporate right now. We've been in a bear market all year, and we've navigated it perfectly well, even in some of these more brutal down moves. And I do actually think that this down move here, maybe I just got short-term memory, I do actually think that this has been one of the more brutal down moves of the entire year. And I wasn't expecting that, honestly, into December. I thought that we could sell off on CPI, on the Fed. I thought that a pullback made sense up here at 410, especially when this day came in. I did not expect, after such a brutal year, that into the end of the year here it would be probably one of the more brutal periods of selling that we've seen this year. And it's been brutal because there hasn't even been there's barely even been like a 5-minute time frame bounce to be able to bite into over the course of these last few days. So just really tricky, but stay the course. Don't be discouraged. Be consistent with your trading. Be consistent with your approach, with how you utilize the information that the market is giving us. And we're gonna have to time a price correct eventually at some point. I like Josh's little meme, especially for Pat. I feel like the green one is Josh and the yellow one is Pat. So that's all I got for you guys. I'm happy to answer any questions or take a look at any names that anybody wants me to look at. Scrolling up here, first thing I'm seeing is from Toussaint. Why is the VIX still so low? Shouldn't the VIX be around 25 or higher? Well, we really are only at 2240 or so today. I actually thought we were a little bit higher than that as an absolute price. Yeah, I don't know. I mean, that's been one of the things that I have found really difficult in this market very recently, actually, is the lack of VIX confirmation. I know Pat earlier was saying that maybe the VIX being down today with the market being down is actually a positive divergence that could be further setting us up for a bounce tomorrow, which That logic makes complete sense to me, but it's been very consistent. I have seen here over the course of the last month or so, like into late December, where it's been. I think it's been very consistent that the market's been weaker than the VIX has been strong, and I really don't like that. I don't have a reasoning for it. I don't have a reasoning for it. You know, we've had chatter in the past on, you know, that the VIX is mainly monthly expirations, and most of the price action is in those, you know, smaller time frame, daily, weekly expirations now, and, you know, that's potentially causing the VIX to give a consistently lower read than it, you know, air quotes, should be. I still don't know if there is a volatility index for like a week-long period, like a shorter dated version of the VIX. I would love to see that. I'd love to see what that looks like in comparison to the VIX. But the short answer is, outside of that, I really don't know. Does anyone know why D-Nut has been getting killed? I mean, oh wow, they really have smoked this thing. I think this thing had some news a few trading sessions ago. I have no idea what's going on with it. I'm not bullish on Krispy Kreme. I mentioned that the other day. I just don't get it. I don't get Krispy Kreme donuts. I don't see why they're better than Dunkin' Donuts. From EJ, would you take a look at CHPT? Is this a name to stay away from? This charge point. Is this the one that Josh Brown is always on TV loving? I mean, I've seen charge point a lot over the course of the last couple of years here, because this was one of the crazy meme stocks. Worked its way up to $50. I really don't know anything about the intricacies of their business, profitability, lack of profitability, time frame to profitability, all that kind of stuff. I mean, to me, this looks like a stock that's now very extended to the downside. Got totally smoked today. Volume picked back up. And it's coming down into basically all-time lows. I would be looking for a counter trend trade on this. Yeah, I mean, at this point, I would be looking for a counter trend trade on this. Pretty volatile day for it, though obviously very weak. If you can get like a trade back through yesterday's low and back up tomorrow, I think you could look for a small time frame counter trend trade. Maybe you can get a bounce back to as high as 1050 on this, which is where it broke down from. I see no reason technically to trust it beyond an oversold bounce. I do, Bandit. It's from John Lee. John, if you're still here, if you can copy and paste that question or restate the question from earlier, if you'd like an answer on it, that'd be great. Otherwise, I'm probably not going to be able to just scroll back on the VTF and find it. From From Dave, I took Apple short at 940. Okay. On the inside 5 and down. Due to and the big support level that's breaking. Yeah, 134 to 135 is big support. You got an inside 5 and down right in front of it. Risk was covered, but I'm just wondering if something is right at support around the open, if it's a smart to play it. I like this trade. You're shorting the break of support, and you have an intraday setup for it. Apple was acting relatively weak. The first candle here is atrocious. The second candle is an inside bar. You had other things like Amazon was trying to look much better into that second and third candle. It was almost like ticking highs. Meta, which had bad news, was breaking its opening high. Apple, I think Google was better this morning also. Yeah, Google had a really nice turnaround on this second 5-minute bar. Apple was like the weakest FANG name that it's out there. The daily support is there. It's being tested. You have this inside 5 and down. I love this as a short. The only thing that would keep me from taking that type of trade is I can't help but look at this daily extension. When I'm looking at this type of daily extension, I feel like these levels have a much higher probability of giving false breakdowns. So that's why I kind of tend to stay away from that trade. You know, I want to be going long in an extended stock into support, not shorting an extended stock through support. I think that is what tends to pay better. But in this case, you had a great looking setup with relative weakness with an inside 5. You had the intraday setup there. It's a really good short. It's a really good short. Use the second bar high as your stop loss, and then it breaks down earlier, the time of day I actually think is an additional reason to actually take the short, not to avoid the short. The only thing I can see against the trade that would personally keep me out of it is that daily chart extension. But otherwise, I love your trade. I'm glad you got paid in it. I hope you really held some for the move, and it was good stuff there. From Toussaint, is there any bullish case for Bitcoin right now? I'm asking because Mara is super low with an RSI of 23. If the RSI gets to 20, I'm buying Mara calls. I'm not the crypto guy. I don't really have a thesis for you on it. I have consistently said since the top that I just don't understand the use case of Bitcoin. I would point to the most impressive thing on Bitcoin to me at this point, which could make me slightly bullish, is that it's not actually lower. I think it should be lower. Given the scandals, FTX and Alameda and that other hedge fund that blew up, and that whatever that those currencies are called that are supposed to be pegged to the dollar, that one that blew up, that led to the 3-hour arrows blow up. There's just so much garbage going on underneath the surface. The most bullish thing you can point to for Bitcoin right now is that it should be lower, considering everything that's going on. And it's not. And like we always say, if something should be doing something and it's not, sometimes it could be a signal for the other side. But I don't have a strong opinion for you. All right, from John, we got a long one here from John, which is fine and appreciated. Can we take a look at Tesla? Working on game plans after the fact, giving the below facts, what would you do? Okay, cool. And I love how, again, I don't care that it's a long question. It's fine. This is how we're all going to learn. But I love how you have this entire thesis and thought process built out into what you're looking for. It's exactly the right way to kind of think about markets. So you got all the facts here, and that's exactly what a trader should be doing. So Friday's close is $150.17. After hours on Friday, it kind of continues to deteriorate. I wouldn't put too much on that. Then on the 18th, so that's yesterday, Elon does this poll for, should I stop being the CEO of Twitter? People vote yes. We have seen that Elon kind of consistently follows through with those polls. We'll see if he actually does here again this time. He kind of consistently follows through on the polls when it suits his motives, I think. So we'll see if it does so this time. What we were saying this morning is that is great for Tesla, right? The biggest thing that I've been saying about Tesla on the way down is, I've been saying it ever since Twitter started. I don't even remember where that was. I wish I could pull up the Twitter chart to see where it was. Ever since day one of Elon saying I'm going to take over Twitter, I was like, if you are a Tesla shareholder, you should be furious. This is so bad for Tesla as a stock that his mind is just getting totally focused on Twitter, which Twitter's been a garbage business when he's had so much success in these other places. And I have forever been saying that Tesla is a tremendously overvalued company. It doesn't belong at the prices it's belonged at, but it's traded at. But the reason why it's been able to trade at those prices is because of the cult of Elon Musk. If you love Elon Musk, you love Elon Musk. That's just how it is. And this is deteriorating that cult, which could cause the valuation to come back down to earth. So there's been so much here that's been bad for the stock. Him coming out doing that poll, if he decides to step down as the head of Twitter, it's the best thing that could happen to Tesla right now. So that is obviously bullish. That news is kind of coming out like last night's when he puts that poll up. So you can see the stock has a big gap up this morning. Very volatile price action, kind of sells off a little bit at the beginning of the day, rallies during our morning meeting, sells off right at the open, heavy snapback on that second, third 5-minute bar of the day to kind of break new lows. Super volatile trading. Let me continue to read your comments on it here. So you have the new general hypothesis. Elon will resume attention to Tesla, and the price will run 5% up to 156.50, 157.70, saying those numbers roughly, depending on which Friday close is used. I would always use the actual the actual market close is what I would go with on that. So sure. So you're looking for the big bounce in it. Seems almost obvious, right? Alternate hypothesis, plus 5% fails. The market rejects and runs down to the previous close by 1 or 2%. Watch to decide which hypothesis wins with a short bias. 12:19 pre-market trading opens it's today at 4 a.m. You're in that plus 5% range. Market generally held until 7 a.m. and then it failed. That's what we were just looking at. Around 153 at 8 a.m. Right into here. Just remember the 8 a.m. prints are always settling. It's when New York Stock Exchange. I forget what causes that 8 a.m. print volatility actually. But you get all these. We'll just call them false prints. They're like catch-up prints. They're not really. You'll see these big moves here, but they're not big moves. It wasn't trading at 158. It wasn't trading at 151. This is the real action here. So you always almost have to ignore the 5-minute candle at 8 a.m. on any charts because it's satisfying whatever it's satisfying with a lot of these delayed prints. So still reading what you wrote. It tried to push up at 9, 9, 10, right? It's when we were doing the meeting, but it failed to return to that plus 5%. Is this 153 a new number? Yes, 153 is important here because that's where your pre-market pivot low occurs on the pullback. And this is a real bounce here. So this 153 is acting as some pre-market support. It's worth paying attention to. We don't want to pay attention to pre- and post-market charts for most stocks most of the time. It's important to say that. So I'll repeat it. We don't want to pay attention to pre- and post-market charts for most stocks most of the time. We only really want to be paying attention to pre- and post-market charts when the price action is significant and it's liquid. Usually that's only going to occur when there's news. So like when Apple reports its earnings, the after-hours action on the Apple earnings day is going to be really important for the next day's trading session. If there's news like there was in Tesla, this price action, 158 pre-market highs, 153 pivot low, that's going to be important for today's price action. That is levels that are worth kind of remembering when the market opens. The SPYs, they always tend to trade really liquid starting at 4 a.m. because of the futures market. So pre-market levels in the SPYs can be something that's important and something that is worth paying attention to. But I don't think that Tesla's grind down on Friday, as an example, is particularly important. Or Tesla's pre-market price action on Friday is going to be particularly important because the volume's not necessarily there, the news is not necessarily there, the spread's really wide, there's just not a lot going on. So we want to be very careful on overreading pre- and post-market price action. You need to know when it's important and when it's not important. On a morning like today, it is important. So where do you enter short? Have the 5% longs will have left the building. Would you have size up? I think that the short today for Tesla, and this is someone who has been consistently bearish on Tesla, it is actually very difficult, that trade. For me, it's less about, because it was so relatively strong. If you want to be short today, a market that's already extended the downside, and I know the market matters a little bit less. The market matters a little bit less for a stock that's in play on news, but it still matters. So I didn't really love the idea of even shorting to begin with. But if you are going to be shorting something, I really don't like the idea of shorting the relative strength. And I understand your thought process. Your thought process is, hey, and Pat was talking about this. There's a lot of people that really thought that Tesla should be up 5% on that news, and they sold the news. So at what point do the people who are buying up there kind of become trapped, and that leads to a feedback cycle of selling into the marketplace? Even with that news, I don't think that there was so much volume going off pre-market today that is necessarily going to really create that. I think that this is just more about the sellers who have already been driving Tesla down, utilizing a gap up in the stock to continue to sell. I think that this is still more about, all right, maybe Elon has decided that he wants to focus on Tesla more and Twitter less because it's starting to destroy his personal net worth or whatever it is. I still think that even with that, there's a lot of people, and I've been speaking to people who just want out, who believed in the Tesla story, believed in the Elon Musk story, let this thing drive. I mean, we got to remember who both the consumer and the kind of standard shareholder of Tesla has been for years. And I do not like to ever get into politics in the virtual trading floor, so I'm not going to now, just insofar as we have to talk about a little bit once in a while to just kind of understand, price action and the market. I think it's very obvious to say, though, that the average Tesla car owner and Tesla shareholder over the course of the last 10 years or whatever it's been now is someone who is center left of center, maybe not deep left, but certainly left of center. And you've got some of those shareholders now who they just don't want anything to do with this company anymore because of how Elon has been alienating those people who are left with what he's been doing in Twitter. But again, that's his primary consumer. So I think that there's still people that just want out. They just don't want anything to do with this anymore. So I think that that's what more is still causing the selling that we saw today, and less people that were trapped from when the stock was up 5% pre-market and trading on relatively low volume. It's people still just kind of liquidating their positions and kind of working their way out of it. So I really think that that's what it was. I like the idea of looking at Tesla long this morning, to be honest. When Tesla was breaking up off this gap fill and the market was improving and then this thing was making highs, I actually love this Tesla long right here. Breaks up, shows you this great relative strength, especially if the market could continue to hold in. Technical pullback to the 80 man, the 5-minute chart. It's still relatively strong. Green on the day. Market's not green on the day. Inside 5, is it inside 5? No, not quite an inside 5. But you've got this attempted pivot off the 80 MA on a technical pullback here that's then breaking up. I love the idea of looking at Tesla long here through this 153. And I see Baba saying that he or she, I still don't know if you're a he or she, and I don't want to get that, got it, sorry. Don't want to get that wrong and offend anybody. I will remember that now. You got tagged in this. I love your trade, man. I love your trade, man. You're coming in at the right spot. You're recognizing the relatively strong stock. You're buying off the 80 MA. Market's maybe not on the side of your trade. That is 100% what you want. That's a great buy spot. Here is where it fails. This 10:05 candle never should have been able to happen in the stock. This is where all the intraday longs are getting stopped out. And if they weren't stopped out by that point, they're definitely throwing in the candle on the 10:30 thing. So you could argue that this is a bearish consolidation and inside 5 and down, and you could have shorted at 10:30. I still think that's a very hard trade. You're still talking about what was the strongest stock of the day that has news that I'm still going to perceive as positive. So to broadly answer your question, I don't like the short. I just don't like the short in it. I think that short's very hard for multiple reasons. I like looking for the long and then recognizing that the market's telling you that the long is wrong, taking a step back and just not being involved, which is a lot. That's a big part of trading, by the way, for everybody. A big part of trading is recognizing, hey, I had this idea this morning that Tesla could be up at $158 today, and the market just showed me that my idea is wrong, so I'm not going to fight it. That's a huge. If you can figure that one part of trading out, you will be so much more successful as a trader. It's a big thing. As traders, they believe in their idea. They want to stick with their idea. They end up losing more than they planned on risking. You can't allow that to happen. And Ari Baba is a he with a capital H. I won't forget it this time. I apologize. Anybody else have any other questions? see there was one more from Toussaint that I missed on consumer staples. Yeah, I mean, you're going to expect your Procter & Gamble's of the world to be able to hold in a little bit better. XLP down 2%. Procter & Gamble is down 0.25%. So, down less than the market. You're going to expect, consumer staples. And look at this. Procter & Gamble's actually held up really, really well. But it's what you would expect. You're going to expect consumer staples to hold in times of fear, generally, for the marketplace. So what's a better swing long, Veru, Cost, or Constellation Brands? Veru is not a consumer staple. I'm sure you're aware of that. This thing looks atrocious. I would stay away from that. Costco's taking a beating here. It's extended the downside. I don't hate Costco versus 450 though. Brands, the Constellation Brands, STZ, they own a lot of alcohol. They're really an alcohol company, but they took that stake in CGC, which I think it's CGC, one of the marijuana companies. I think it's CGC, which has kind of been a mistake for the company. It's definitely cost them a lot of money. I don't know. I think Costco is probably the safest amongst them. I do not trade ES futures. I like to sleep at night, and I still don't sleep enough. Hey Judy, having access to the equity market from 4 a.m. to 8 p.m. is already, thank you, is already more than enough for me. I should probably focus on working less. So what I do for my charts, Baba, is I pre-market will have pre-market charts up, but as soon as 9:30 hits, I go to just market hours. So I'm looking at moving averages that are based on pure market hours. Does anyone else have anything? Yeah, my sweatshirt. I had the opportunity almost a year ago to be a guest lecturer for Harvard for one of their classes, which was a really cool experience. And they tossed me this sweatshirt, so I rep the sweatshirt. I got to be a guest lecturer. I probably never would have gotten accepted there, but I get to rock the sweatshirt and got to teach the students, which was pretty cool. And yeah. Okay, for sure, Judy. Anybody else have anything for today's afternoon meeting? Otherwise, I'm going to wrap it up. I got to catch a train back to Manhattan at some point tonight. Could you talk about when it's time to flip your view of a stock? I asked you about GH during the day today, and it turned out to be a great short. So, what you're describing, I've always found as one of the most difficult things to be able to do as a trader. Like, what I was just talking about earlier when we were talking about John's question about, if you come in with the long thesis, right, or whatever, and you're looking for that pop, and the technicals are telling you that your idea fails, I think it's an incredible asset, talent to develop as a trader, to know that your idea is wrong, and then stop trading the stock and not rack up losses. I think that's incredible. To be able to go so deep as to have the long thesis and then short the stock because the technicals are actually telling you that it's a short, I think that's extremely difficult to be able to do. Felipe, who unfortunately hasn't been able to be around with us as much recently, was always fantastic at that, and I was always so impressed when he'd be long the stock, make money, he'd get the short signal, and not only would he get out of the long, but he would flip short. It shows an incredible degree of mental dexterity to be able to do that. I'm not great at it myself. For me, I'm just happy and proud when I can recognize that my idea was wrong and pull back and not accumulate losses. So, knowing to flip. With that said, I also have seen traders do the opposite, which is not a good thing either, where they're so frustrated that their long trade's not paying them well that a lot of times when your trade is telling you that it's not a long, it doesn't necessarily make it a short. We should recognize that also, right? You have this long setup, this long thesis, and the stock just can't go. Well, maybe that's not because it's a short. Maybe it's just because it's a consolidation day today and it's going to do nothing. And the worst thing you can do is just churn yourself to death by, oh, I'm long, the long's not working, so guess what, I'm flipping short. Oh, it's consolidating. You know what? I knew I should have been long to begin with. Look, it's breaking up. I'm going long again. And then you're not getting the ball through. Now you just took a loss long, took a loss short, took a loss long. Stock's not doing anything. This goes back to what I was saying of just knowing when to go to step back and say, hey, I shouldn't even be trading this name or this market at all here for the rest of the day. Like, you really need to be good enough to flip, to recognize that this isn't just exactly feeling bullish. This isn't just an opportunity to, like, you have to be so good that you got to recognize this isn't just an opportunity for me to be taking profit on my long, or that my long is failing, whatever it is. But this is actually an opportunity to be able to come in and short. There has to be a specific short setup that comes in. It's not good enough to go short because your long idea is failing. You have to be able to flip short because you have a specific short setup that's coming in, like that extension shooting star, or like let's go back to Apple. You could have come in today. Apple's one that I think in theory you could have done a flip on. You could have come in today and you could have said to yourself, hey, Apple was just a $150 stock. It busted 140 support, didn't look back. We're all the way down at this 134 to 135 support. I really expect with this degree of extension, if this degree of a move, that I can get a bounce off of 134. The open happens. This 134 breaks by 3 cents. So you try that trade that we do a lot where you buy back through 134 versus that low, or versus, Friday's low, and you get this a little bit of an initial bounce. And I actually bought 134 off the open. I did that this morning. I didn't flip short, but I actually did that. And I remember saying in this second bar here on this bounce that everybody should be booking some profit on the long. So whatever, maybe you book a little profit on the long, and now all of a sudden you're seeing the relative weakness that I was just talking about earlier in the meeting. Wow, Apple's not bouncing nearly as well as Amazon is bouncing, nearly as well as Tesla is bouncing, nearly as well as Google is bouncing. This is just not looking good. I'm getting this inside 5 here. You know what? There's a big level here. Given the relative weakness, given the inside 5, when I get stopped out of my long, I can actually flip short. There's a real setup here. It's an inside 5 and down. It's a break of support. That's what I think you need to have. You need to have the actual setup. And not just like, I'm going short because my long's not working. That's a recipe for disaster. But if the setup is actually there, then you can go for it. Now, a thing that I've always found infuriating that could put me on tilt, so I'll also throw another little warning out there, is if I'm long and I lose money, and then I'm short and I lose money right after, I flipped and I lose money on both sides, I'm going to need to take a walk after that. But if you are going to do it, again, I do think that you need to have the specific setup come in. Okay, cool. Anybody else have anything for today? Otherwise, we can wrap it up. It's approaching 5 o'clock. Okay. All right, everybody. So we'll wrap it up there. Holidays are coming up. Let's try to have a good week this week. Again, like I was saying in the beginning of the meeting, don't get discouraged. Stick with the thought process. Stick with your understanding of how markets work, and be consistent. And whereas an individual day is an individual periods of time, part of being consistent means that you don't always have success on any given day, or even necessarily any given week or every given week. But it's the consistency that'll pay you in the long run. So these last couple of trading sessions I've found to be particularly difficult. We've done a great job calling out, some of those like lows like perfectly. Like, I really do think I was 3 for 3 on long call outs on a brutal downside day today, which is not easy. So don't let it get this. Don't become discouraged. Be consistent with the thought process and the approach. That's what's going to pay you in the long run. Have a great night, everybody.